Good morning, good morning. Good morning, good morning, good morning. Hello. How is everyone? How y'all doing? Let me open up the chat. Good morning, good morning. Let me open up my screen so everyone can see what I see. Right. Can you all see my screen? Not yet. In 2 seconds. What about now? Can you see the screen? Kalimera. Guten Morgen. Yes, good. Good morning. Hello, everyone. Monday. The beginning of the week. Let's see. After that very interesting weekend. How is everyone? Good day. Good afternoon. Good evening. In Australia and Philippines. Good day for us here in Europe. It's 10 a.m. local my time. Right. I forgot that I joined. Did I scare you? Sorry. Hi. How's everyone? Awesome. Good stuff. We are amazing. Just woke up UK time. Yeah, I know it's a bit early. I used to start these sessions earlier, like 9 o'clock my local time. That was like 7 o'clock UK time. So I shifted a little bit to the 10 o'clock ish. Yeah, full on time. 9:10. Okay, good. You are 1 hour behind. UK is like 2 hours behind. So I know it's a bit early for them. It's gonna wake up 8 o'clock. It's not even a morning show to them. Like 8 o'clock in the morning. Morning. Good morning all. Welcome here. Welcome. 51 people. I'm gonna give some time before I start. I'll give some time for others to join. I've seen that 120 people would like to come and pay a visit and say hi, so I'll give some time. There's only 52 of us here. Still recording, yeah, I'm still recording, you see. Still recording, man. How is everyone? I hope you're doing well. We're going to talk about a little bit of both Bitcoin. Remember that we talk about the 3-day AMA crossing, right? Remember that I posted like was it on last Monday was the first video, Monday before. Got liquidated on Bitcoin dump. Oh, why did you get liquidated? Where was your stop loss? Why did you get liquidated? That makes me very sad. I don't want to see my people get liquidated. Liquidated is, liquidation is supposed to be like something deleted from our vocabulary. 0.001 stop loss. Yeah. Well, for you to get 0.1 as a liquidation price, that means you win 100x. Never enter a trade without a stop loss. Remember, when your stop loss is your friend. Stop loss is your lifeguard. Stop loss is your mechanism to save your money and re-enter, right? To have a tight stop loss is not a bad thing. You have to make a deal with yourself. Am I going to use tight stop loss? That means I know that most likely I have, not most likely, let's put this in the correct manner. You have higher probabilities for you to get stepped out because your stop loss is very tight. But why do we do that? We do that because we want, let's say, my thesis right now, I want a tight stop loss, and that is because if my trade gets invalidated, I want to get out as soon as possible for me to find another opportunity to enter. That's why you wanted to have a tight stop loss, right? A tight stop loss would give you that quick out option, so to say. I'm getting out quickly, and also the tight stop loss will give you a higher leverage if you're using a calculator. So you need to understand, what the pros and the cons. Let me change the date here. I was on the last video, the 19th. Today is the 21st. Monday, the 21st. Here we are. Good to go. So, make sure that you understand the pros and the cons. Right? If I do this, I have these advantages, and then I have these disadvantages. If I do the other way, then I have other kind of advantages and other kind of disadvantages. So, adjust and understand exactly the tools that you're using, and how it will affect you. So be careful about that. Be careful. Make sure that you have all the strategy laid out for you, right? King G wants to speak, wants to come up to the stage. You want to welcome? Say good morning. I saw the dump and I pressed the wrong button. Oh my god. You pressed the green instead of the red one. Yeah, it can happen. It can happen. When you get all this FOMO and you got all this excited and you want to jump in as quick as possible and then you just press the wrong button. One of those days. Oh dear, oh dear. Okay. Expensive lesson to learn. Just to add up on that one, make sure that you do not jump on a move. You got to stop out on H bar. We're going to look on H bar as well. We're going to have a look at them. Okay, it was isolated. Alright. Right, until King comes up, let's see how long it's going to take him to come up. Sometimes, internet is a bit slow. Where is he? Think King left? Really? I gave him the invite. Since he got the invite, he left? Is that true? Oh well, one of these. Greetings. Hello, Sax. Good evening over there. I got liquidated when I entered the world of trading competition. Oh, okay. I was in massive profit within the first few hours of trading and reversed so fast that my stop loss was not filled. Okay. So your stop loss, was it a limit order or was it a stop loss order? Good evening, Sax. How you doing?
Doing well in yourself, Els.
Good.
Just wanted to pop in and say how's it, and
of course, you're more than welcome.
Well.
You're more than welcome, brother. You're more than welcome. How you doing?
Yeah, doing all right. Up in profit, not by much, but little bits works.
Yep, that's true. That's true. Bit by bit.
Yeah. Bit by bit. How do you eat an elephant?
Yeah, I mean, not too bad. I've been busy all of this weekend. A little bit excited when I saw Bitcoin dumping, to be honest. I got really excited. I think other people got scared when they saw Bitcoin going down. I got really excited. What that is because I'm waiting really Bitcoin to come down and reset and make my altcoins very, very cheap for me to enter. I've been waiting for that for a very long time. So yeah, I'm a bit excited about that.
You're right. I've also been watching that order block that you've got on there on the screen.
Yeah, the first one got.
I'm wanting some orders there.
Yeah, I mean that one got let's say mitigated. That order block, which is intermediate order block, and we can call this extreme order block, or you can call it a swing order block because it's an order block that changes the direction from downtrend it goes to the uptrend. So this is a nice order block. If, let's say, the down move was even stronger and was keep going, it has a huge momentum, most likely what we could see is that we'll break that order block, and then it will turn to order block breaker, and then it will come down to head to the second buy zone that I have down here, which it happens to be the golden zone of the last wave to the up. So if I bring my Fibonacci here from the bottom to the top over there, you can see that that buy zone is sitting on my golden zone, and also it's sitting on my support trend line. So I've got like two things going on at the same time. So again, another thing, you have another order block here. You've got horizontal there. I've got an horizontal, and also I have another block sitting there, which is again, it's a swing order block. Down move, shift to the up move. So that is a swing extreme order block. So, good things there. Good things. I'm waiting to play out. Do you think it will maybe...
I'm sort of expecting a bounce off that order block first.
It could be. Because we see that maybe it lost the momentum. It lost the momentum, and maybe do like a consolidation, a small drop to clear out the market, and maybe we'll come and retrace and trying to reclaim that level there. It is possible. I mean, there's no clean sign for us to see the future in the TA and say, oh, it's going to go up, it's going to go down. You don't know. I don't know. Personally, I don't know.
Yeah, for sure.
Yeah. Sure. It is a strong order block.
So let's...
You here? Did I cut you off?
Yes, I'm here. Sorry.
Oh, okay, good. No, I thought I cut you off.
I missed the question.
Yeah. So, I mean, it's a strong order block here, and we'll see how it's going to react. I don't see any fair value gaps there. I mean, it's the other previous order block there anyway, so there is a small fair value gap there, but most likely got filled when it came down and touched that. So we'll see how it goes. I mean, it is an order block, and the normal conditions, so to say, like the down movement has finished, right? There's no momentum anymore. It's doing like a consolidation. Maybe it wants to come down, retest that order block, form a new order block there, and then it will bounce off slowly and come back again. It's Monday. You don't know what the markets are going to do. The European market is open now, so let's see what they've done for the last few minutes. Nothing major. There's no really major indication yet. It's only 20 minutes past, so London has opened. Frankfurt has opened like
everybody's getting their coffee.
Yeah, exactly. So you will see them. You will see them that they're going to react an hour later, half an hour to an hour later. They do some reactions. If I pull my indicators here, let's turn this to a 4 hour. Let's have a look where. Okay, so classic RSI is at the very top overbought. Okay, DMI, which is a split in information volume, is like all solid there, all close to each other. ADX is 11, nothing, that's low. Buyers and sellers are exactly on the same level, no separation. So nothing, it's very boring for Monday. Once again.
And there's no volume either.
No, there's no volume, there's nothing. There's nothing there.
Tels, could you maybe look at a BNB chart?
Okay, we're
something I want to buy.
Okay, let's have a look. BNB. Here we are. What would you like to see on the BNB?
So this is a 4 hour. I'm just looking. Yes. Okay. If you zoom into the hour.
Okay.
Yes. Okay. I've also got that.
All right. So this is roughly about the trend line, about there. Let me fix that. I got multiple points there, multiple points there. Let's put that up down here. around there. Okay, yeah, we'll see how that plays.
Yeah, so I'm busy watching that at the moment. It's broken down my trend line at the bottom.
Right.
So I'm waiting for potential retest there.
Okay.
Before I'm sold on a short.
So your trend line is looking like this, so to say, roughly.
Very similar to that, yeah.
Okay. So to your eyes right now, that trend line is broken, right? It came down and broke it. It's not. I mean, it's not the wrong.
It's a close, yeah.
Yeah. I mean, yeah. You can have that as a trend line. You got the average. I mean, you got one touch there, went through, came back. You got the bodies there, you got the wicks there, you got multiple wicks there, and then you have the break, the retest, and it's going down. So most likely the BNB ad is looking that's going down, and you have the buyers dropping down, the sellers are picking up a little bit. ADX is 11, a bit slow. Okay, you need volume, and this is where ADX comes into play. Yeah, so you got early entry. It's not bad. BNB wants to go down.
Haven't entered yet.
Okay.
I haven't entered yet. That's why I'm waiting for volume before I'm committed.
Pick up. Okay. I see your point. Well, when you get these kind of wicks, yeah, so big ones, that means maybe that the price will try to come down and have a look what's going on. If I go to a smaller time frame, you see you have a body sitting here. So let's mark that here. So you have a body sitting here. Let's go to a smaller time frame. Yeah, we agree the bodies are finishing there. So most likely, Bitcoin will like to come down and revisit this level here. So it will come down to this area of body because this is another order block sitting here that is trying to push the price up. So maybe, it's looking good. On a 15-minute, it's looking good, and it's even dropping more. Look at that. The sellers are picking up. ADX is trying to pick it up. Maybe he wants to fill this gap. We'll see. Very short term, like for 1 hour or two, a little trade can play here, but only if you entered up there. When you got the break, the retest, when you get that area there got broken, that could be a nice indication for you that you want to go short until around these levels, and that will could give you another good 2.5. And if you were on 10x of that one, that will be 25% for you. But that is very short term. Yeah, you know that you're going from here to there and that's it, and you get out.
Okay, all right. Yeah. So that's what I was wondering, is where would a target? How do you set a target to that? Do you just follow like the downward trend line?
I follow,
you follow the price action.
I follow the price action, but also I'm looking where the bodies are. When you get these huge wicks going up, you switch to a smaller time frame and say, okay, where is the body? The solid information. What is a wick? A wick is that the price came down, but very fast came up again. So it's like not confirmed. A price that went there, but it doesn't belong there, so to say, yeah? So that's why you get a wick. You have evidence that the price went there, so you cannot ignore the fact that the price went all the way down here to 205. You cannot ignore that fact. However, the bodies, you have engulfing bodies are sitting around 2011 or 2010, right? So I said, okay, this is like a confirmed price action. I had a close and an open on these levels. So it's like a solid ground. So okay, maybe he wants to come down and fill this gap. There's a little big gap there, so maybe he wants to come down and fill this gap. So I look no further for that very short trade from this trend line to these bodies. I look no further. So okay, I'm gonna do like the 15-minute trade. Maybe it's gonna play out on the next 1 hour. I said okay, for 1 hour my little trade now is short around these levels until you see like a consolidation, and then you get a reversal pattern, and that will be your exit trigger. So okay, that's little trades that you can take when things are very boring. Yeah, when things are consolidating and there's not a lot of moves, what you can do, you come down to, you can see the 15-minute chart and say okay, I can see that. Then I can go down to 3 minutes and see what's going on. You can pull the trend line. Let's say I'm happy about this trend line because it starts from here. I got another touch there, got another touch there, got another touch there, multiple touches. So that trend line for the current period on that time frame of 3 minutes is looking strong. It's like looking good. My trend line is looking good. So you got an indication that it wants to go down, right? And that is on the 3 minute, guys. Yes, this is like little trades that you're looking just for you to make some money for the next 1 hour. You got the indication that it wants to come down. It's trying to came up, rejection, came down, push it up. I said okay, it's trying to reclaim it and then lost it again. So if that was a fake out, right, you will see that it will come and bounce off. It didn't, right? It came down and gave you an indication, trying to reclaim it. Everybody got excited, and then it went down again. I said okay, well, it doesn't want to go up. It cannot go up, and you see that a small rejection and then start going down. So that will be like an early trigger for you. You know that you have a small order block there, right? It did not respect that order block, right? So it went through. So you say okay, I'm going down. And that is very minimal, very small trade, tiny little trade that you can say after that point you broke it, and my target is 2.2 or 2% at least, 2%, right? And say okay, I'll head down for 2%, potential optimal target 2%, and see how far I can get with it. And you just follow the TA on the 3 minute.
Right, perfect.
And you can do like little small trades on the boring days. Yeah, I mean, if you're looking for short, yeah, you're doing good. You're doing good.
Okay,
right?
Perfect.
Because sometimes, guys, I try to be honest with you. Sometimes it is a little bit, it takes a lot of time for a 4-hour chart to play out for you. Yeah, it's going to take a long time for the chart to show you the correct time and spot for you to enter for the big run. You're waiting for this 4 hour to play out. You're waiting for that trend line to get broken, the stochastic RSI to reset. It takes a lot of time. It may take days for you to wait until it's ready for you to go in. So what you can do, same principles, but you need to understand that you're shifting down to 50 minutes, right? And so, okay, what do I get for the 15 minutes? Can I see something for very extra tiny trades? And there's no need to go stupid crazy with leverage. Yes, it doesn't mean that because you go down to 15 minutes and 3 minutes, you need to go like 20x or 50x. No, being like more, how to say, a little bit more in a safeguard. Yeah, use your safeguard. So okay, I know it's very tiny. I know that you still get the same structure. That doesn't mean that you need to go crazy on leverage. You're not going to make all the money on the 3 minute chart. Yes. So you can say short position, let's say around that area. What is my stop loss? My stop loss is up there. If it goes back in my trend line, it's getting validated, so to say. My target will be all the way down to that trend line there. So almost 3 to 1. That's all right. That's not too bad. 3 to 1, right? So that will give you 2% if that works out. 0.7. So let's do the math quickly. My maximum risk of my wallet is no more than 2%. So my stop loss right currently is sitting at 0.7. So you divide that 2% by 0.7, and what do you get? you got almost 3, right? So 3x. If you multiply 3 times 0.7, you get 2.1. So that is your leverage, 3x. So you can do that with 3x. It goes down, and it's a safe trade because you know that this stop loss, it will always be equal to 2% as money-wise, as dollars. And you can do like a 3x.
Perfect,
Yeah. And you can make some money until the 4 hour, until the market resets, until it gets a clear indication. You can do a small trade just for the fun of it. So okay, I know it's boring. Let's do something. Identify the waves. Find the waves. It's a downtrend, uptrend, downtrend. That was a downtrend. That was a small uptrend, and then since then it's downtrend. Follow the waves. Yes, this is uptrend. This is downtrend. This is uptrend. This is downtrend. Well, even that one is at the end of the downtrend. Let me correct that. Downtrend, and then you get another uptrend, and then since then you got a downtrend. Follow the waves, right? Trying to enter a short from here, a long from there, a short from this area, and let it play and see how it goes. You can make a little money. Don't go crazy. Don't go like full sizing and I do 50x. No, it's a 3-minute chart. Come on. Don't over risk things. Make some money because the weekends are boring. Yes. So you can make a lot of money until the big trade, the big fish is going to come. The big fish is a 4 hour, right? Until the big fish is going to come, you can do the 3-minute, 3-minute. It's exactly the same principles, guys. We do the 15-minute as a small time frame against the 4 hour, right? We do the 4 hour TA with the overview, and we come to 15 minutes to see our entries. You can do the same thing on the 15-minute as a big time frame and a small time frame, the 3-minute, and have a little play. Exactly the same principles. Waves, trend lines, support and resistance. This is your support. This is your support trend line, right? Use that as a support. It's going to bounce, go long, right? It's going to bounce, go long. Yeah, you want to play the game from the resistance, go short. Come to resistance, go short. Resistance, go short. Until the market
changes.
Stabilizes. Yeah, until it changes, until it gives you the big fish. Have some
break
little
above
fun.
That line.
Yeah, I mean, look at that. I mean, it's still going, and you just follow it. And what you can do, Stacks, you can say, okay, I entered here. This is my emergency trend line. Remember the emergency trend line? Use the emergency trend line. This is my emergency, right? So if you see price action breaking that, maybe it's time for you to exit. Or you can use a 4-point system, which is for this down movement. You need to see 2 high, low high and high. Twice.
Then if it reverses, it goes the other way around.
Right. So when, let's say that the price is coming down and then it is looking to break, and that will give you what? It will give you a new high, a new high low. This is your first pair, and then you need to see that exactly the second time. Another high, another high low. When you get these 4, which is the 4-point system, this is a confirmation of reversal. Right? So until you get that, you're still, still good to go short for follow that little. Follow the trend. Just follow the trend, and go down to 3 minutes. Super fine tune that trend line of yours. Here it is. That's my trend line there. Let me fix that angle there. It's okay. That makes a little bit sense. Let's fix that. I want to make sure that I have the average move. Right. Fix that. Get that there. Get that there. Here you are. So I say, okay, this is it. Now this is the 3-minute. And it could be that will be your entry because you were expecting to see if it's going to lose that order block and lost that order block. You see you've got like multiple order blocks. You can see order blocks all over the place. Why is this an order block? That level there, or that area there. Why? Because it broke the previous high, and it went through up. It had a little momentum on the 3-minute chart now.
And it created a fair value gap as well.
Exactly. So you're expecting some reaction going on here, and that price action gave you say, yeah, I ignore that order block. Yeah, it's not strong. And it went down. I said, okay, I see another order block there, right? That level there, I see another order block. Okay, cool. If you break that, it means you're going down. So that is an order block breaker. It went down. You use it as a rejection, as a resistance, and it went down. So that is an order block breaker, right? Use that level there. So that will be your entry, so to say. You lose that, you're going down, I'm going down with you. And see how it plays. Use that trend line for the moment. Are you going to reverse? Are you going to go down? What are you going to do? Until then, have a small target to these levels. You can have some fun on the 3 minutes. And you can make maybe $20, $50, $100. It doesn't matter. Not something crazy, but have some fun. Make some money. Remember that I said that sometimes you have this invitation that comes out, around the corner. You have a new birthday coming up and say, I didn't see that coming. Birthday party, or I need to buy a present, or I need to, get something for my partner. Something happens. It's like out of your program, out of your schedule, and you need to make some money. So listen, right now, I'm sitting on X amount of money. I can't really touch it. I have to pay bills, whatever the reason. I need to make some money. Go find a wave. Put some money in, make some profit, transfer that to your credit card, and off you go and buy your present. And you'll have your original money as well. So, use the money to make some more money. This is, what we're here for. Use the money to make some more money. If the 4 hour, the big setups are not ready yet, they're not there. The market is so insecure, so to say, uncertain, and you don't know what's going on. Okay, go on the 3 minutes and find a wave and ride a wave, and do a little trade, small trades.
Perfect. Thanks, Dales.
Oh, you're welcome. Have a good evening.
Sorry, man. I'm gonna have to jump off now.
All right.
Kids to fetch and that sort of thing. But thanks for walking through that. At least I know my head is thinking the same way you are.
Yeah,
I got into a rune short earlier on, doing the exact same thing. So, and that's
Brilliant.
About to TP now. So.
Good luck, TP. That's good. Book the profits.
Yeah.
Book the profits.
Yes.
Yeah.
Yeah.
Good
Perfect.
stuff.
All right, guys. Have a good one.
Have a good one. So, guys, yes, always book your profits. If it's getting there and you are in profit, book them. Yeah. It doesn't matter how much it is. Is it like $2 or $5, $10, $20? It doesn't matter. Just grab them. Good morning, Darren, the crypto seeker.
Yo,
how are you doing?
what's going on? Hey, good. Thanks, man. How you doing?
I'm doing good. I'm doing good. How are you?
What's your name again?
My name is Salis. Salis in Greek. Yeah, Salis in Greek, but if you cannot pronounce Greek, it's okay. Salis is alright. Salis is the
Salis.
Salis. So, what can I do for you? How are you? How are you doing?
Yeah, could you just I was wondering if you could look at another trade setup, but before you do that, if you could just explain that risk profile that you were talking about earlier. When you're saying, the stop loss is at 0.7 and you're risking 2% of your account.
Okay, good.
And then you divide the 2 by 0.7, and then that gives you your leverage, right?
That's correct.
So does that mean that you're only using 2% of your account and you're using 3x leverage?
That's a very good question. This is what I did when I first started, guys. This is exactly what I did. I said, guys, I need to put my risk management in play, because it was one of those moments a couple of years ago, the moment, that what makes you profitable is not the strategy. And I was like, hold on a minute. That doesn't sound right. Well, it is. The the process that is going to make you profitable is the risk management and not the strategy that you're using on your trades. And I was like, okay, I need to explore these things. And then I had the moment, and I'll show you the Excel. That's why I pulled up the Excel. When I first started, guys, I was like, I'm going to use 10% as risk. I can risk 10%. So what I used to do is I had, let's say, for example, $1,000 on my wallet, and I said, okay, I'm going to put my risk management in play at the very beginning, first of all. So I said, okay, 10%, it's good. So that means I'm only going to use $100. That was my thesis back then. I'm like, okay, risk management. I'm not going to go in full wallet. I'm going to use only 10%, and that equals to $100. And every time I was entering a trade on $100. And then I stopped worrying about risk management, and that was my second mistake. And I was like, I found out later. Now, if I use that approach, after 10 losing trades, if I use 10 times $100, that means after 10 losing trades, I'll blow up my account. I'll lose completely of $1,000. In the very unlikely event that I was very strict with my 10%, that means the first trade was $100. The second trade, because I lost, let's say, $100, because let's say that was my
90 is 10%. 90 would be 10% of your new balance.
Of the new balance.
I thought you're supposed to stay consistent though, and always risk the same amount.
Exactly.
And not the revolving amount.
Exactly. So, when you're new to these, and if you do the math at once, let's say at the very beginning, the mistake that I used to do, I said, okay, what's the 10% of my 1,000? That is $100. I said, okay, every time I go in $100. So I stopped doing the math. Yeah, I stopped doing the risk management numbers going on, the growing numbers. I forgot completely the fact that every time my wallet was going down was draining, and I wasn't using any more than 10%. So when my wallet was $900 and I was using $100 as my entry, I wasn't using 10%, I was using 11%. And the third round, I was using 12%. And the fourth round, I was using 15% of my wallet. And then, 5 losing trades down the line, I was like 20% using my wallet, because if I'm supposed to use $50,
10 though.
Yeah, and I was like, okay, I'm doing something wrong here. What am I doing? And then that's why I built that table, right? And I said, okay, listen, if I need to stick to 10%, and if I got 10 losing strikes, which a lot of people can have, yeah, even me, I can have 10 losing strikes. I use myself as an example. No one is perfect. I don't have the crystal ball. Everyone can have losing strikes, right? All you need to have, I'll show you another table later. All you need to have is 3 winning strikes out of 10. If you got 3 wins out of 10, you can be profitable. And people will say, hold on a minute, how is that possible? I'll teach you later how that is possible. It is possible. So
you make 3%, so 30% instead of 10. So you do that times 3, and that's 90. So you get 90% back.
Well, if you use 3-to-1 ratio, if you use 3-to-1 ratio as your minimum on your trade, and you have like 3 wins and 7 losses, that will give you a profit. In the end of these 10 trades, you're going to be in profit, not break even. You're
up 20%.
Yeah,
20%,
something like that. I have the numbers down. I'll show you later. Not in percentage. I have it as in dollars, but I'll give you that table later. Now back to the risk management. I said, okay, first of all, I need to make sure that every time I need to update my wallet. If my wallet is sitting at 1,000 and then I lose, then I make sure the second time I go in with $90. Now, using that strategy, It helped a lot that I wasn't using the fixed amount every time. That was I fixed the first mistake. Then the second mistake that I found is like, if I use $100, it would take me years for me to double my account. And I said, okay, I need to figure out something differently that I can build my account in a quick manner, in a polite manner, like quick manner. Because if I only use $100, then for me to have, let's say 20% in profit, that means 20% of the $100 is $20. So what is $20 to 1,000? I mean, if I have profit 20% of that $100, you say, oh, 20%, I made it. Yes, 20%, it is on your $100 position. What is $20 to the entire wallet? It's only 2%. And I was like, okay, hold on a minute. Now, if I win every time 2, 3, 4% of my wallet, it's gonna take me more than 100 trades, profitable trades, for me to double my account. That is a very long road, right? And I was like, okay, that's gonna take too long. That's my second mistake. So I came up with another idea. Let's use the max trade size calculator. I said, okay, let's pretend that I have 1,000. I'll give you that Excel for you. It's free for you to use. You can update the information on that Excel here, on that cell here. You can put 500. If you have 500, the formulas here will take care of the numbers for you. Same applies here, right? If you have 1,000, go for it. If you got like 5,000, go for it. It will update all the numbers for you, including that trade capital, right? Okay. Now, I'm using that table as an example. What would it look if I'm using 10%, 5%, 2%, and 1%? So I look closely on that table and I say, what my wallet will look after 10 losing trades. If I use 10%, strictly 10%, updating every time of my wallet balance, that means after losing trades, I'm going to be down by 69% after 10 losing trades, right? If I was using fixed amount, that will be blown. It will be 100% minus. If I use 10% updating every time, that is 70% down. Again, when I put that table, it was like another smack in my face. We're like, bam! You're down by 70%. How are you going to recover that? You have remaining 30%. How are you going to recover? You're going to be remaining with $300 if you started with 1,000, right? Or even, even 1,000. You're going to be losing $700. So that means you are just a little bit above the $300. How are you going to recover that? You had $1,000 and you are down to 300, and you believe that you're going to recover this easily? It's like a big no. Yeah. No. And I was like, right, okay. Maybe I should go down. And then I used a 5% example, and that was down by 43%. I said, okay, that is a little bit better. If I have a bad day on trading, after losing 10 trades, I'll have more of half of my wallet. I said, okay, it's looking better. Not ideal. And then I got a 2% example. And I'm like, okay, if I lose 10 trades, I'm down by 20%. That means I got another 80% available on my wallet remaining. And we're like, okay, that sounds better. 1%, even better, baby. 10%. I said, okay. That's why I put the colors like 10%. A lot of people made that mistake. 10% is not a lot. Well, it is. After 10 losing trades, it is a lot. 5, it's better. 2%, even better. I said, okay. Now, as Thalys, my let's say my thesis right now on my trades is I want to risk no more than 2% on my average trades. That is like my average top. Now, if I want to be risky on one only trade, because my TA is very, very strong, and I got a very strong feeling, and I have a huge week, I'd say, okay, you know what, maybe I want to only once I'm going to risk 5%. 5% is very, very generous, very, very generous, but I'm only going to do that once, one trade, that's it. After that, I'm going to go back to 2%. Right? Now, another thing for you in the future, the larger the wallet you have, the less you want to risk in the future. There's no need for you now to risk. I mean, now that you're trying to build a portfolio in your wallet, yes, I understand that we're going to be a bit riskier because we are very small, and we need to risk a bit more. I understand that. You can do that, like 5%, 2%. But let's say later on, and I wish you all good luck with that, and I do wish one day that you're going to write to me, yes, I made it, I'm good. 1 year later, 2 years later, I can make a living out of crypto or market trading. Doesn't matter if it's crypto or forex or commodities, stocks, it doesn't matter. The strategy is the same thing. If you come back 2 years later, you're going to find yourself that you're going to risk less because you have a larger wallet. Maybe by that time, you're going to be you'll be probably sitting, let's say, a nice 25k. And I said, listen, I'm trading now with 25k. Yes, 2%. It means that you're going to lose $500. Why? You can go down to 1% and then you can lose $250. The higher the wallet that you have, the less risk you're going to need. I was like $1,000. Yeah, on $1,000 I was risking $20 and I made it. Why, when I'm on 25k, why do I need to risk $500? If I made all my way up risking only $20, when my wallet is getting larger, why do I need to risk $500? Hell no, you go down to 1%. You go down to 0.5%, 0.5%. And you're going to risk in $125.
So how does it actually play out on the chart though? Like with that example of 0.7% stop loss, and then you're risking 2%.
Right. So
what's your profit going to look like if you're getting what did you show there on the chart? You showed like a 2% move, right? So if you're on like a 2.3% move, like what's on the chart there?
Okay, let's go back to round numbers, $1,000, and then I'll go back to the chart and explain to you exactly what was my strategy here. I said, okay, listen, I need to make sure. Now, always my strategy. Let's say that I select, let's go back to Excel, I select this column. This is my thesis. This is how I trade. I said, I don't want to trade more than 2%. That's it. End of story, 2%. So, in my mind, I said, you know what? I'm not risking more than 2% on every trade. Every single trade, no more than 2%. I keep that in mind. I say, right, 2% equals to what? Equals to $20. Maximum capital risk equals $20. All right, so that is equal to $20 because my wallet is $1,000. Right, good. So back to the tool here, the short tool. I said, okay, this is my tool, 0.69, no problem. Let's go like a round, like a 7 as it was before. 0.7, come on. Okay, here it is. So 0.7. I have to do the acquisition now. So I said 0.7 must be equal. I mean, my writing's terrible. 0.7 equals $20, right? Must be equals $20. That's it. Why? Because my stop loss is $20. So that stop loss must be equal to $20. If I get stepped out here, it's going to be $20. So how much is going to be my leverage? And that is where you divide that by 0.7, and that will give you 3.1. So I'll take the round number and I say 3 or 2.8 to be precise. Yeah, so I said round number 3. So I said, okay, this is my 3x. So if you multiply 0.7 times 3, that will be equal to 2%. That will be equal to $20. So I said, okay, that trade here is on 3x, right? So how much is the profit? 2%. Okay, so 2%, that will be equal to what? That will be equal 6%. Right? 6% to 1,000 is what? $60.
60, yeah.
Right? So either I'm
Right,
gonna
just
lose,
like, yeah.
either I'm gonna lose $20 on my stop loss, or I'm gonna win $60 on the way down. That is 3-to-1 ratio.
R&R. Yeah, so it shows it there in the middle there. Yeah.
Exactly. What's that?
Of
3-0-1.
Yeah. So, because I'm familiar with this way of trading with risk management, but I thought it's a little bit different than what I'm used to, because I'm used to, like, I don't know, you using 50x, because it doesn't matter what leverage you use when you're doing capped risk like this.
Right.
So and then you don't want to have to put in, you don't want your costs to go up, so you want to put in as little as possible so that you can run multiple positions and you run around isolated. But you know what I mean? So this is isolated as well, right?
This is isolated, but I go full wallet.
Yeah.
I go in like with $1,000 this time. I go in like my entry is going to be $1,000.
Yeah, that's what I didn't understand, because right now it looks like your entry is just $20, but you actually have the full 1,000 in.
Right, and my stop loss is going to be on costing me $20.
So you're saying you have a $3,000 position then with 1,000 margin?
That's correct.
So your full 1,000 is riding, and if it hits your stop, you only lose 2. But if it hits your take profit, you get 3% of 3%. Should be 9%. 9% of 1,000 is 90. Right, because you're using 3x.
3x.
Or no, sorry, no, never mind. It's 3 times 2.3, 2.1. Right? Yeah. Okay, so that's 60. Okay,
6%.
right. 3 times, 60%. Or 6%, right? It's 6% of 1,000.
Mm-hmm.
Okay, but it's like it's. Yeah, it's weird. Weird how the whole amount is being used. Because the way that I learned it, you're not putting the whole amount. You're just putting in $20 as a margin.
You can do, brother. You can do that. It's fine. This is what I used to do at the very beginning. I said, listen, I want to use 10% of my wallet. And then I said, okay, this is equals to $100. So my positions were all the $100. And then I had 20% profit. And I was like so excited. Yeah, 20% profit, book it. It's 20%. Yeah, take it before somebody else takes it. And then I was like $20. And then when I put that $20 back to my wallet, I was like, oh, I just made 1,000 to 1,020. So how can I make 1,000 to 2,000? It's gonna take me like years. And we're like, hold on a minute, that doesn't look right. That doesn't look right. How can I do that? So I said, okay, I need to refine my strategy. And I came up with the idea: what if I could use my full wallet? Now, another advice I can give you is not a financial advice. This is like a personal advice, friendly advice to you. You can use. A lot of people say, why don't you use $100, which equals 10% of your wallet, and why don't you use that as 10x, and that will give you 1,000 position? Yeah, why don't you do that? Yeah, it can work. But
too much at risk.
You're paying 10x fees. If I use 1,000 position on 1x, right, equals again 1,000. Right?
Yeah.
My trading size is equal. This is just an example, but this time I'm using x1. This is 10x. This is 1x. I'm getting charged 10 times more fees from this one for the same amount of size. So why do I need to give them? Why do I need to borrow so much money and pay them fees?
Right.
Yeah, so that is the taker. Yeah, I mean the exchange will tell you that you're going to charge you 0.1%, right? Is that the number they say? 0.1%, and if you 10x that is fully 1%.
So the way you would put this in the exchange is like how would you do that? I can't even picture how you would do that.
Yeah, hold on.
Because I'm used to the other way
right
where
next to
like
me.
you increase the leverage, right? You like max out the leverage to 50 or 40, and then your cost goes down, and then you just
Yeah, but
put in the 2%.
yeah, I mean, yeah, a lot of people
But I
have
don't
this
want
kind of
to
pattern.
like that's. So how do you do this strategy? How do you use this strategy instead, directly on the exchange?
I mean, I try to maximize my trading size instead of leverage. Size matters, right? And to me, I've this is where, I mean, let's put that 0.7, was it? And then a 0.7 round number will give you 2, and you understand here is that you're trying to maximize your trading size as 2.8, right? That's what I said to you before. That was a 2.8, and I gave you a 3x
Why is it
example.
What? Oh, right. That's the position size. Another name for position size, trading size.
Trading size is a position size, right? So it gave
you're only risking 20.
You're only risking 20. And
yeah, and 2x. And 2x. So then what do you just select 2x on the exchange, you're on cross, right?
No, I do ISO.
So this would be isolated, okay, which is different than the other way. Okay, so you just put in 2% in the stop loss?
That's it, 2% of the stop loss.
And then the whole position's in.
The full position in. And I put my calculator here. This is my calculator. I said, okay, how much is your stop loss on the TA? Right, so let me bring my TA back. Where was it? Training view. Here it is. Here's my TA. It's telling me that my stop loss is 0.7. I come back to the Excel. I said, okay, my TA is telling me 0.7. And then it will tell you, okay, max safe leverage with full wallet entry is 2. It's a round number. Yeah, it doesn't give you 2.8.
Why isn't it 3 though?
Because it's not the 3,000.
I thought you were talking about 3x.
I was because I did the numbers. Because if I do 0.7, right, 0.7 times 3, what is it? Equals to what? 2.1. And because it's 0.1, it rather gave you a round number to the lower. So instead of 3, it gave you a 2.
Yeah. Why did you write 3 before?
Because I did it on my head. I didn't use a calculator. Right?
Okay, so it's only 2x leverage that you need.
To be accurate, brother, is 2.8. If I did
Why is it doing that? Why is it doing it? Why is it making it 2.8 if your leverage is now 2?
Oh, hold on a minute. 0.7, right? And let's put the other way around. 2% is my maximal risk. Use a calculator. 2% is my maximum risk, and my stop loss is 0.7. That will give you 2.85, right? If your exchange is able to give you 2.8, you can do that. Some other exchanges are using round numbers. Either you're going to use 2 or you're going to use 3. Because 2.8 is smaller than 3, the calculator gave you the 2 as a round number.
Okay.
I cannot give you 2.8. I can't give you 3 because it's less than 3. It's 2.8. You can see that from the trading side.
Definitely don't put 3 though, hey? On the exchange, because that would throw everything out of whack.
If you go 3, you know that you are a little bit above or $20. That will be $21.
Oh, okay. So only
like
yeah.
So instead of when my stop loss, even when the stop loss is going to get hit, it will not cost me $20. It will cost me $21 because the ratio was 2.1. If I divided that,
it isn't that big of a deal.
It's not that big of a deal, right? It's not a big deal. That's why I gave you out of my head 3.
Okay. So then you so you select 3x, let's say.
Yeah.
Well, let's just do it on the 2x, just in case. So with 2x, obviously, it would be a smaller move.
Yeah, it will be 4% move.
Right, it would be 4%. Okay, so you do the 3x, so you get 6% because your entire margin is in, and it just tells you to use 3x, and you just put the stop loss, because it's not like the position size calculator I'm thinking about, right? It's like the one where it takes you forever to build your account.
Yep.
So it's literally exactly like that in terms of what you're risking. You're just making more each trade by capping the risk. That's awesome. Because the way I'm used to trading is use 10x and then just put 10% of your balance in, so then you're only risking 1x or 1% on the initial entry, and then you ladder in. But that's risky because it can reverse on you, right? And then you get stopped out at entry or stopped out in a bit of profit. But with this way, you don't really have to monitor it at all.
Right. So this is I found this method, for me, it works at best for me to move my wallet a bit faster. But always make sure that my risk is in place, and I know that I'm not going to risk more than $20, and that's it. If it goes against me, it's only $20. I'm only losing 2%, and by losing 2% after 10 losing trades, I'm only losing 20% of my wallet, and I'm good. I'm going to be just fine. I can recover easily. So this is my sweet spot of how I do my risk management and how I take my trades. Now I do isolated. You can do cross if you want to use the compounding method, right? You can do the compound and say, listen, the compound is a different method, but the only thing that changed is the cross to from isolated. And I have another video explaining about how to do compounding. I'm more than welcome for you to see it on the YouTube. It's been recorded. It's on YouTube, so you can see it. Awesome. I can give you the links for everyone, because it's a hidden playlist. I'll give you the link for you to go visit anytime when you're free and have a look. All the recordings that we had here on the coffee session, and have fun. See all the methods that I'm using out there.
Is that a random thought about your trade here? So why not go 6x, but still risk 2%?
Well,
so
for me
to
be
a way to still only risk 2%, $20, but then to increase the amount that you win.
Well, in order for me to still use 2%, that means I'm still losing $20. Yeah, I'm risking $20. For me to get a 6x, that means I need to go down by 0.3 my stop loss, and then I would get a 6x. So that means 0.3, I need to bring my stop loss down here, right? And on TA, that doesn't make sense. I was like, okay, why did you put the stop loss there when you have price action telling you that was the last high? So I said, okay, I'm using my stop loss now in the middle of nowhere. It makes no sense. So let's put that stop loss back there, right? But when the price is going to move away from your entry, right? Literally, sometime when the price is going to move away, you're going to bring that stop loss down to break even. And if that let's say trade reverses and gets out, then you lose nothing, because here is $0. You lose nothing. So it's like breaking even.
Just with that note, so what's the deal with increasing your leverage while you're in a position?
That is a different method. You can do that only with cross and with some exchanges, not all the exchanges. I'm not using that kind of methods.
Something about you have to add more. You have to add more to your margin or something for it to work.
Yes,
Like if you start with 10x and then you drop to 5, you have to add more to your margin, right? Is that how it works?
This is how it works. I mean, what they usually do, they start with 2x, so to say, and when it's playing out, then they said, okay, it's a winning trade, I'm going to add. So they add to the position, and at the same time, they do a 3x, right? And they do a 3x leverage. And then when it goes even further up and said, okay, this is going well and it's winning, then when it finds a nice consolidation area and then breaks it, do a trend line, and when it breaks it, then they said, okay, I'm going to add more to my position. And they add more, and then they increase the leverage to 4. And then
do you have to add? Can you just increase the leverage?
This is on some exchanges you need to add. Yes, but I'm not expert on that, so I cannot give you a lot of advice or guidance about that, because I don't do this method, and I'll tell you why. Because you started down here, so to say, this is your base, and all the way up you're increasing your leverage, and in some point you end up, let's say, on 10x, right? All good. When it's going up, it's all good. What if when it's going down, right?
A lot of put people, your stop loss at that trend line.
Yeah, well, a lot of people
or that support.
I know,
because that's the head and shoulders.
Exactly. So a lot of people say, oh, I've got a lot of space, I'm good because I'm going to break even here. No, you're not, because you're 10x. You go down 10x times. So that means you can be break even up there. You started all the way here with 2x, and then you went 3x, and then you go 4x, and then you went 5x here, and then you went 10x there, and you're building all good.
But and you just draw a trend line. When it breaks, that's where you put your stop.
Yeah. That's all. I mean, this is the correct theory. But in practice, a lot of people, they get like excited and they forget updating the stop loss. And then when it's turning around, you're losing on 10x. Every single move, every single percentage that's going down is calculated as 10x. So it took you a lot of time to build up. But when it's going against you, it's going to wipe you out very soon because you're on 10x on the way down. So the good thing is the advantage is you are building, but you need to be very strict with your stop loss and your exit, because when it's turning around, you go down full speed. You're going down like 10x down, and it's going to eat your profits very, very fast. And that's where a lot of people get wrecked. Like, oh shit, I thought, I move X amount to the up, and then I only need 1/3 or 1/4 on the way down, and I got broke even. And that is true, because you yes. And
I just realized the difference in your strategy, your risk management strategy, and the other one. Yeah. So like you're increasing your margin size so that you make more, but you still risk the same, versus the other one, if you risk the same, you make less, and your margin size is like 10%, so you can theoretically run 10 trades at a time, which is stupid because then you have to do 10 times the amount of work, versus you could just have one running, right? Because the other way, right, you lower, the more you increase your leverage, the less is the cost. So therefore you can then run more trades, but it's stupid. You just run one trade at a time, and then you bank more percentage.
On the wrong run. Yeah, I mean, I'd rather be in one trade and make sure. This is leverage. In spot, it's different. You can have like 10 positions in spot. You don't care. It's fine. But on...
I was wondering how you could combine both strategies. It's hilarious. Crazy. It's quite simple. Hey, you just got to look at it a different way.
You have to see it in a different way. I mean, just use one trade, go full wallet, use isolated, make sure that it doesn't kill you, and just be on the top of it. And then you're gonna make less percentage, so to say, but you're gonna make more money because your size is greater. And don't go crazy with leverage. That means you don't need to pay a lot of fees back to the exchange.
Right. Yeah, it's crazy. You're just allocating your entire balance instead of divvying it up into 10. and then running 10 trades is just run it one at a time, slow and steady.
Even
Bank more.
having 3 trades
That's awesome.
running at the same time, it's gonna drive you crazy. You're gonna like looking at
Yeah.
3 charts, and then you're trying to do TA on 3 of them, and then at the very beginning, until you get very good at it, and you get some tolerance from the chart, because at the beginning when I first started, there's no way I'll be able to look at 1 minute chart. Now it's a game. I laugh. I look at 1 minute chart and say I can do it. I don't get panic anymore. Other people see the 1 minute and they get freaked out because it's moving so fast, and they're not yet learned how to do their TA, and then they need some time to think about it.
Oh, you use the 30 and the 5 for the 1.
I use 3 and the 15 for the very fast moves, so to have some fun and make some money for the time being, for now. And so now we watch the 15. It's very easy and calm. I watch the 3 minute and have a look at this. I can even see the 1 minute. It's no problem. I don't get panic. I don't get panic. I just follow the price action. I said, listen, I just need to see lower lows and lower lows. And that was
it gives you more detail for when it's reversing. But if you go to the 5 minute, it shows you the overall trend. Exactly. And then you don't even have to look at the 1 minute.
Yeah, I mean, I just look at the 1
minute.
Nearly
the 30 minute.
Yeah, I mean,
I use the 35 and 1.
That's good. Whatever makes sense to you. I use the 15 and 3 minute just to make little trades. I know that the moves are very small. It's only like 2%. It's not a big deal. It's not a big trade. I know this. But I can make some money on 3x. That is 6% of my wallet. Why not? When markets are boring and there's nothing going on, the market is not a flat line.
It's crazy, and you're only risking 2%.
Exactly.
You're benefiting from your entire wallet, but you're only risking 2.
Exactly.
So if I wanted to risk 1, what would that look like? To make 6, I'd have to have a smaller stop loss. So the more you risk, the wider your stop loss can be, right?
Yep. That means
obviously,
if you want to risk, let's say, less on the stop loss, that means you are looking always on the 1 minute. You're always looking at 1 minute, right? And let's say, now this is the 15-minute trade. Let's put that 15, right? This is a 15-minute trade. What if I was looking at 1 minute trade, and then you had this trend line on the 1 minute, right? And it got broken.
And there's that bearish momentum candle.
Right, and you say, okay,
that's a good entry right there.
Right,
really, when you think about it.
Good. So I say short entry, I'll go around there, and my stop loss is going to be above that candle, because it broke
even
that
technically
trend.
Higher.
I can even go here.
I mean, it broke the support, but I mean, if you're even riskier, you could have entered at that bearish momentum candle. Okay. It's like the third. Well, it's the second momentum candle. Oh, the third momentum candle. So there's 2 momentum candles prior to it. So it's riskier. You shouldn't really do it, but it's basically 3 momentum candles in a row.
Right. So
showing you bearishness.
Let's have a fun.
But definitely
now.
A riskier way.
Let's have fun. Let's have fun now on the 1 minute chart. Yeah, it broke the trend line. It came down to retest it and it's pulling away. So I give you the benefit of the doubt that you enter even here. You got the first breakout of that trend line. Let me grab the tool. You got broken of that trend line, comes down, trying to come up here, trying to push it, right? And it fell.
Yeah.
So okay, this is my retest. It failed to print any high. It did not even come close to this level. So I use that as my stop loss, and then while it's pulling away, there's no way for you to know this is the wrong tool here. Let's say that it's not possible for you to know this is the last high. So while it's pulling away, you say, okay, I'm entering. So that will be my entry, that level here, and that will be my stop loss. Let's see the numbers now. 0.06 is my stop loss. So back to my calculator, 0.06. What is your leverage now?
33, but then if you want to change the risk to 1, though, we want to change the risk to 1 because we only want to risk 1% as an option.
If I do 1%,
but I want to make 6.
If I
want to risk
1%,
1 and make 6.
If I do 1%, look at that. It's going to be 16.
Right, but will I make 6% on it?
No, you
on
don't.
The same move.
No, you don't make 6%. You make 2.4
on 16x.
On 16x. So what is?
But you increase that. No, you increase the profit way too much. You dragged it all the way down. We're going off of what it was before, right? Which was like 2.3.
That is 38%, roughly. Right?
How is that? Is that
30% profit?
How is that a 2.3% profit target?
Well, it's the same
you dragged
target.
It all the way down.
All the way down. The same target as in my 15-minute TA. This is a 1-minute TA, and this is a 15-minute TA. The same target. Right. I'm targeting that body over there, that body over here.
Right. Oh, right. Right. Okay. So you're just entering earlier. Yeah.
Exactly.
And so then you get 38%.
You get 38%.
Holy macro! Look at that, eh?
Huh? So if you,
wow, that's crazy. Instead of 6.
Instead of 6.
6.
That is because you had different time frame. That's the only way for you to have tighter stop losses when you go to smaller time frames. And this is what we call snapper entry. Now that is very basic on trend lines, right? You need to be extremely good at TA for you to do 1-minute snapper entries. And I used to do that with order blocks, not just trend lines. I do that with order blocks. I have different, let's say, approach on my charting, so to say, my trading. But if you use trend lines, it works. Trend line, break the trend line, retest. Failing to recover that trend line and it's pulling away, enter your stop loss. Because you're using a smaller time frame, you're going to see more price action, you're going to see more candles, and your stop loss will be targeted more closer to your entry. So your stop loss is going to be 0.6. On the 15-minute, my entry was here, my previous high was up here on the 15-minute, and that gave me a gigantic 0.7.
What a different way to look at things. Wow, that's awesome.
Good.
So you you wait for the break on the 5 is what I would guess, right? Because on the 5 it's going to show the candles mean more on the 5-minute than the 1, right?
I mean, it will give you more price action. So basically what I do, guys, I always trade the 4 hours and the 15. I always have been, and I always say that to you. But what I do, guys, sometimes when the market is boring, I said, okay, you know what, it's boring, doesn't move. Let's say now we are in the European session. The European session is boring. They don't know what, they don't move the crypto. It's only the US and the Asia. They're trying to move the crypto. I said, okay, it's a bit boring. What can I do to make some money? Some money, like 50 quid, $50, so $20, something. Just have fun. The markets are not flat line. Even when it's boring, the market is not flat. It's going up, down, and then it's going down, and then it's going up, down, and then it's going to come down. It's like a range.
Yep.
Doesn't move, but you do have waves. Use the waves. Use them. Just make sure. That's why I go back to 15, and I make sure that I ride the correct wave. Where am I? Oh, it's a downtrend. Okay. I make sure that I'm using short positions on the small time frames. Oh, it's an up wave. It's an uptrend. Okay. If it's an up wave, then I'm using long positions. So when I switch now down to 3 minutes, between these two circles, I make sure that I go long. There's no point of me going long from here to there when it's a downtrend. It doesn't make sense. It's just very small legs. But the downtrend is large legs. make sure that you ride the same, the current wave, you are on the same direction with the wave. It's like a surfer, yeah? You're trying to ride the wave on the way down, not going against it, right? And now here, it gave you a break of that trade line. I said, okay, what's going on here? Are you going to break this high? Are you going to give me a high?
A while would have to play out though. It's got to give a higher high, then a higher low, then another higher high, then another higher low.
I just need a pair. I need two high highs, because it's a downtrend, yes? So you need two high highs and you need two higher lows. And
by that time it could be like, it would have ripped its whole move, like.
So this is my low.
Don't you think?
Right, this is my low. Right? You came up.
I think it's going to take out previous highs, isn't it?
What do you mean? I didn't get you that.
Like, for it to make that many highs and that many lows, it's going to keep breaking previous highs and lows. So my concern is just that once it does those 4 moves, it's already run. It's already like, 70% of the move is run.
Yeah, but you're gonna look. I mean, you don't need to panic. I said, okay, this is my last, let's say, low, and then it gave me an up move. It gave you a new high. Is this high higher than this high or this high? No, it's not. So it does not panic me. So it comes down again, and it gives you a second. Let's say this is a healthy low. Now this is a higher low. So this is the first higher low. I said, okay. Push to the up. Did he give you a higher high from this level? No, it didn't. I said, okay, false alarm. We're going down now. So it comes down. It gives you that high. I said, all right. Now that high still is higher than this one. I said, okay.
And it has longer wicks, so it's more prominent.
Right. So,
and it's actually done the 618 retracement.
It could?
Yeah.
So you're asking yourself, okay, this now is higher from this high. So, okay, now it's going to come down again. And you're going to question yourself, if this low is going to be higher than this one? Yeah? This is what you're going to look for. Where is going to be the new low? It's going to be here, or it's going to be there, or it's going to be under. If it's going to be under that level, then it's going to be a false alarm again. That was a fake out. Right? So you don't need to jump on the guns. Now, if it has no attention, if it doesn't give you any low and said, listen, this is your second higher low from this one, and they said, okay, you know what? I'm looking for exiting. And it is what it is. Now it's trying to come down. Okay, print that lower low. Give me that low. Where it's going to be? And you're just waiting. Where that low is going to end. I have a wave to the up now. Let's say up to here, and then down, and then up. Where is going to be the low? I'm waiting for the low. It's going to be here. It's going to be higher from this low. I'm waiting. I'm just waiting. If you get higher, then it's like the moment. You know what? I got 1, 2 high highs, and I got 1, 2 high lows. This is the time for me to exit. Until then, you just wait.
Enter. If you get a higher low, if you have 2 higher highs and 2 higher lows, don't you enter at that point?
Well, if I was short from here, then I will be my exit. Excuse me.
Oh, your exit. Yeah, for sure, your exit.
Yeah.
Right. Yeah. Yeah, I guess it would play out pretty quick on the 1 minute, maybe like 15 minutes or so. Let's go higher low, higher high, higher low, maybe in the next 5 minutes. So it needs to make another higher high to enter as a long.
Sure. Right. And now you're gonna wait and see. Are you gonna break this low? And this is like let's say a small resistance here. Let's say, this is a resistance.
Probably will break it and go to the 618 of that previous move, or the 50%.
Let's have a look.
But it won't close. Probably it'll probably wick. Well, maybe it will close. It's on the 1 minute after all.
So let's have a look. So this is my
quite the momentum candle there, huh? Picking up momentum.
So let's have a look. He's going to break that resistance.
Looks like it,
Yeah, he broke it. So
it'll go to the So could you go to the 5 minute for a sec?
Yeah, sure. Oh, here it is.
Yeah, so that's a momentum candle forming, and there's a minute and a half left. But we have a previous momentum candle, bullish momentum candle. So, yeah, no, it shouldn't go any lower than the 618 or the 50 because it has a lot of bullishness. It's got a higher low on the 5 minute as well, and a bullish momentum.
And you got wicks there, and was like, okay, what these wicks indicated to me? These wicks indicated to me that there's a lot of buying pressure. I said, okay. Another indication, even I go to 3 minutes or 1 minute because I was watching before. What did I got? I got the W formation, which is the double bottom, right? So I got the W formation, which is like this, right? I mean, let's make it draw it better. This is a W formation. 1, 2, 3, 4. So this is a W formation. When you get a double bottom on a W formation, most likely it's going to go up, right?
Double bottom, yeah.
Right. So even on the 1 minute now, we got the body, but it didn't close. So it did not print any low. It's like equal low. And let's have let it carry on and see. We've got another 10 seconds there, so let's have a look what's going to happen.
What about looking at the higher time frame just above entry to gauge how the trend is going, how the momentum is being tracked? Isn't it good to do that as well?
Well, I can go back to 15 minutes and say, listen, I'm still on a downtrend.
Or the five, I meant, just because it's like,
yeah, but I'm a downtrend.
If you're entering on the one,
I'm a downtrend since then, you see?
Right.
But I don't know.
Right now, I just meant like the 5. The 5 minute is what I meant, like just looking to see, because it's all about how this next candle closes, right? Because it's right at support.
Well,
it holds more like influence, right, than the 1 minute.
Yeah, but I don't keep on shifting all over the place. I don't keep on shifting on like all the time frames. I try to stick to one time frame or 2 time frames. Like I use a 15 and a 3. So I go to 15. I said, okay, this is still a downtrend. Then I go to 3 and said, okay, this is my support. What are you going to do? Is it going to be a fake out or it's going to come down again? So I only got a wick breaking that support. Maybe it wants to reverse. And remember what I said, do I get a new high, a new high, low? If I get 2 of them, like 2 pairs of them, then for me, it's about time for me to exit. So it's looking, even on a smaller time frame. Even in a smaller time frame, I said, okay, this is my low. This is my high, low. That was my high. That is my high. And that will be my exit. And now it wants to go up, or it wants to go either it's going to break it, that previous high, or it's going to consolidate. You don't know.
Right.
But I got a high, low, high, and a high low. So that will be my exit. That's it. And that down trade from all the way up there now it's finished. It is what it is. I took my profits. So that was my entry, and that will be my exit around that place, and that gave me 0.5. And if I do that 10x, that will be 5%. 5% of my wallet. 5% is $50. That's it. Right, let me see a little bit of the chart because the chart is moving.
It took like 15 minutes to play out. 15, 20 minutes to play out.
Let's see how much it took. It took, let's say from here all the way down there, it took just about 2 hours. So in 2 hours, you just made $50.
Yeah, never mind. not 20 minutes at all.
Yeah, but
okay, so what about entering? What about entering on the long now? like it's going to retrace, right? But we don't know if it's going to respect that previous low or the one prior to it before the trend line.
Well,
right?
You need to do the TA from the beginning and say, okay, what do I have here? And you'll probably get a new trend line. Let's put that as a new trend line and say, okay, this is my new trend line on a smaller time frame. And it got broken. I got exit here. It's acting like a support wall. You just need a little bit more information. I mean, you do got touches there, but I'll see if it's going to hold it. If it's going to hold it, then you can say, listen, I'm going to go long from these levels and go up this time.
Stop loss under that previous low.
Yeah, I mean, if you're gonna, if you're TA and you are comfortable doing that, and say, listen, BNP currently is shifting around, right? And I see that it was respecting that level there, and it's still uptrend, right? I'll enter as close as possible to my trend line, and I use my previous low as my stop loss. And
that tried to stop. Those wicks there, huh?
Yeah, so that will be your stop loss. Your stop loss is 0.007. And your target may be all the way up to that trend line, because you don't know if it's going to recover that trend line.
And then
that is a possible. That is a possible trade.
What percentage of that be for a profit?
0.67.
So then, what do you think the leverage would be? Off the top of your head, using 0.07.
And how much your risk is going to be?
Yeah, but this is the 0.07.
2%, how much are you going to risk?
Well, I guess the 2% is the safer number, because you can get away with risking 2 and not blow up and make more, right? So it's a no-brainer, really.
Okay, so if you want to risk 2%, that will give you, divided by 0.07, that will give you a little bit less than 30.
Yeah.
Here you are, 28.
30x, 28, huh?
That's why I said to you it's going to be a bit less than 30. It's 28. And what is
it's 2.8 if it's 0.7.
Yeah, it's 2. Right? It's 28.5. So basically a round number to 29. But anyway, 28 is fine.
Yeah, because it would be 2.8 if it was 0.7, right?
Right, so 28 times 0.67.
What, 6.7?
Yep. So
10 would be 6.7, so it's like
28,
roughly 60, 30%.
That would give you
20%.
Almost 20%. It's 18.
20%.
Ain't bad.
Crazy. Yeah.
20% on your 1,000, wallet. That is $200. Sometimes, guys, it's not a financial advice. It's just a friendly advice to you. Sometimes smaller time frames can give you a little bit of fun for you to do the TA and practice your brain that you can act quickly on a fast moving chart. Yes, it can be fun. You can make some money. And another little trick that I like is getting in and out of the market quickly. And that means I will not get caught up from the algo that is been running by the exchanges. Because when they see high leverage positions for sitting for a very long time, they do stop hunting. So I'd rather not, when the market's boring, I'd rather not be a target. And so listen, I go in and out very fast, and I make my money in and out very fast. I'm going to stay around for an hour or for a few minutes, not for days. And that's it. I'm out of it. Make money in and out quickly. You can have 1 or 2 trades of these days like this, you have 2 trades. You've been sitting here for 3-4 hours. You make 2 trades, and because it's boring, it's very slow moving. This is 1 minute now chart, and it doesn't really move. Why? Because the market doesn't move. If the market was pumping, I'm telling you, that chart will be out of the screen. You're trying to pull down the town all the time for you to see it, but very slow. Now, so if it's that slow, just find a wave and ride the wave, and stick to one trade, one chart, one trade, one time frame, and you're gonna be good. And you can make 20% on your wallet on a dead moving market. It's good. It's good.
Yeah.
Let me see.
Thanks a lot, Thales.
You're welcome.
I gotta head to bed now.
All right.
But could you put that link or the link for the calculator in the chat?
I'll post it right here. I'm gonna upload it. I'm gonna upload it for you. Upload the file.
I need to know where to go in the Discord. It's gonna
be on the chat. Yeah. I'm gonna put it on the chart. Okay. Documents.
Is there a chat going on in this live session?
And here's your there's a chart here on this stage. So if you go on the top right, you should see a little icon that says chat, and you can see the link that I just uploaded. Right?
There's I'm on the the app. It's is it like a message symbol,
Yeah.
The speech box thing or whatever.
Let me have a look. Let's bring Discord.
Oh yeah, there it is. I see it. Trade.
Okay, up there, show chat. It will up, and here it is on your right.
Okay, so that's downloaded.
Right. Let me see.
It won't open it?
Why not?
That's strange. It won't. I don't know. It says
it's an Excel file.
Downloaded it. It says can't open file, and Chrome was opened, but there's no like web link or anything. Just says 13.81 kilobytes.
Yeah, it's a small
trade.
That's correct. It's 13.48. It's very small.
Yeah, and I'm
it's called risk trade
in
size.
my download section.
Yeah.
Yeah, I'm in my. I don't know. It's like I clicked the link and then it brought up Chrome.
That's correct.
It says downloads in the Chrome browser.
That's correct, because that's where you download it. Now, if you double click the file that you just downloaded, you should open your Excel. If you have Excel installed, it'll be there for you.
Oh, no, I don't. I don't have Excel.
Oh, okay. That's why you cannot open the file. Do you have Google Sheets, which is free? Go to Google and is that spreadsheets? Google Spreadsheets. If you type that,
okay,
it will give you a free version of not Excel. They have their own version. They have their own stuff. You can open it there.
Okay, so I click download. It downloads, and in order to open it, you have to have like Excel or like a spreadsheet software. Okay.
There is one other application called OpenOffice, which is free Office for you, but it's called OpenOffice. It's like open source. It means free version. You don't need to pay it, and it's like 80% looks like Excel, and you can open the file there.
Wow.
It's a spreadsheet.
OpenOffice. Okay. Awesome. Hey, thanks a lot, Thales. Have a great day, evening.
Have a great evening. Have a good sleep, bro.
Thanks, man. Where are you from?
I'm from Greece.
You're in Greece?
Yeah, from Athens.
Right.
So next time you come down,
what time is it over there?
It's like 11:45.
Oh, okay. So.
All right.
Similar time zone.
Good. So take care. Have a good sleep.
Greece is awesome. They're my neighbors to Turkey. I'm half Turkish, South African. So.
Turkish, South African. Oh,
I know all about the Turkish Greek history.
Good. We're gonna have another day to talk about that.
Have a great night, man.
Have a good one. Tamam. Have a good one.
Tamam. Take care.
Take care. Bye. Hey, Chris. How you doing, buddy?
What's up, Talis? How you doing?
I'm good.
Good, brother. And yourself?
I'm alright. Having a little fun on the dead slow markets.
Oh, yeah. I've been looking a bit at the charts this morning as well, and everything just doesn't look positive right now. I don't know what's your overall feeling.
Well, my overall feeling. Let's go back to 4 hour. I was watching that MA. We had the 3 day. We had the golden cross, right? And that happened back in 2019. The previous golden cross. Let me bring it back here for you. Goes back all the way. That was the last time we had a golden cross. Back there. Let's have a look. Here it is. That's a golden cross. So that happened, guys, back in 2019. Summer 2019, August, like we have now. And what I noticed is after that we got the golden cross, we had Bitcoin going down. Let me grab the tool. So it was going down after the golden cross. It was going down, and we have like a dump and then push to the up, and then we had a major clear out, a market shakeout. And since after that it never looked back. It just went up and up, and we had a bull run. So I was like watching these areas, and I said, okay, most likely it can play the same game again. So after the cross, we're going to see Bitcoin coming down, lose the first trend line, the current trend line for that period. It lose the first one and went for the second one. And I was looking at that and said, okay, let's have a look our zone here. And I said, we had a very, was it the 30th of July, we had the golden cross. And the 5th of August, I made a video about this. I said, guys, we had the golden cross on the 3-day MA. And what I do expect, I expect that it will come down to test that trend line, and most likely will break it. It will break my first trend line, which is the current of this period, and maybe it's going to target the second trend line, which I have down here. And then I was trying to put the order blocks as well, because I'm a very big fan of order blocks. I said I got an order block there, so maybe it's going to come down and bounce. I had an order block there sitting there, and that's why I have the buy zone. I said, okay, maybe I'll have a first buy zone, and then maybe it will come and retrace. If not, then I have another option there, and I have another option there. Now, why do I get that nice buy zone over here? And that is because of the Fibonacci. So if I pull the Fibonacci from the last down wave, shift to the up. So this is the base of my previous trend line, and the Fibonacci all the way to the top. This is my golden zone. So A, it's my golden zone. B is my trend line. C, I have another order block there. So I got like 3 things happening in these areas. So this is a big POI, point of interest, for me. So maybe because it did not reclaim that level there, that horizontal level there. So if I put here as an horizontal level, it's just sitting on that level, and I don't know how it's going to react. Most likely, I believe it's going to continue to go down. Maybe it wants to go down.
Well, on that, on your rejection level there, that's if you were to put your fib from the top to the bottom of that wave, you'll find that we've rejected the 786.
Okay, so from top to the bottom there.
No, if you would go from your order block, if you go from the bottom of your OB.
Would you like to share your screen and you saw us? That'll be great.
Sure, I can do that.
Okay, here you go.
So can you see that, Talis?
Yep, I can. And I'm gonna bring now
Okay, cool.
your screen to my recording so everybody can see it. Here it is.
Okay, nice. So we've been tracking up in this on the higher time frame. I was watching this zone where we rejected.
This is major. Is that 32? Is that 32?
Yeah, around the 31 mark. Yeah. This is pretty much exactly where we rejected, around 31,500. Right. Which was a major support and resistance. You know, when you break a support becomes resistance. So it was a major support. It was a support that was then lost and rejected, and we've now essentially rejected it again here. But so we've kind of had this, in my opinion, this almost it's a short-term reversal, right?
Right. Yeah.
Because if you were to have a look at the wave, you know, it would have been nice if we could get a 50% retracement of the dump, but I couldn't see us moving into a bull. I still can't see us moving bull market to break all-time highs. You know, so I was looking at some key levels over here, which I mapped out once we had this rejection up here. So we had the 27,000 level that everyone was watching, and that came in with your 200 week moving average, right? And also your 618. So for me, that was a nice bounce zone. I got stopped out over here because I was expecting us to have some kind of reaction here. And now that we've also over the weekend, you can see we've lost this is my fib. It's basically from the bottom to the top of this wave.
That last wave, yeah.
And you can see we've rejected almost perfectly on the 786. Normally with the guys that joined me last week, so I've got my green sheet over here, and this is the list of charts that I look at to determine my daily sentiment towards the market, because you know what I mean, like you're always taking bets. It's like responsible betting, you know.
Yeah, you need to see the whole market how it's acting, because I see that you have Bitcoin, you have Ethereum, you have the dominance of Bitcoin, you have Dixie, you have Total, you got the dollar as well, SPX US30. So yeah, I mean, all this stuff, and also you have Bitcoin and Gas. Is that your currency in South Africa, ZAR?
Yes.
Yeah, cool.
This I added. Yes, I actually just added this yesterday because.
You need to see how
out of curiosity. It's not usually on my green sheet, but I was wanting to see how our shitcoin in South Africa is comparing. It really is, man.
Yeah.
I mean, you wanna it just out of here's my currency sheet. I mean, if you this is the rand, the ZAR to the dollar, you know.
Oh my god!
Like over the years,
they're losing all the time.
We're currently at COVID levels, so it was just a curiosity for me. That's why I added it in. Yeah.
Good stuff. Good to see.
So at the moment, I get a bearish sentiment from the Bitcoin chart for the day. These candles can always change my mind, you know, but for the day, I would look at it as a negative sentiment until I get a candle close that's above that 786, and then I go, okay, well, if we've got a candle close above the 786, then that would move the trend towards a more bullish move. We would be essentially breaking on the lower time frame. You see, we've got these punches into the resistance.
Resistance.
Yeah. So if we can close, if the daily close was to close above the 786 line here, then that will give us a sentiment that essentially
trying to recover.
I see it here. I see this zone as almost like it's like a petrol station. Every time you punch into it, you're filling up the tank, and you're drawing the liquidity out of that zone. And if we push into it and we break and close above it, that would mean that then essentially that gas station has been filled. But more probable, we would take this. If we get a push up, I would not expect there to be a candle, like a daily close in that area. It's probably just going to be a liquidity hunt where they come up and they try and grab some of the people, everyone who's now shorting the market. They're going to come and try and get those stops, and in order for another leg down to sort of the higher low that we've got on the higher time frame. So my sentiments essentially it lines up with yours. It's lovely it's also always great to see another trader looking at a chart in a completely different way and coming out with the same conclusion.
The same result, the same conclusion. It's great stuff.
Yeah.
I mean, there is another block there on the left that you have there on your support trend line, which is your green trend line there. So I assume that it touched it a little bit, it's trying to push up, but it's failing. So I assume that it has more room to go down. And then I'm going to use the daily wave to the up, the last uptrend wave on the daily. And this is where I put my Fibonacci, and that's where I got my golden zone. So it's interesting. I mean, I was waiting, to be honest, I was waiting for Bitcoin to come down, but not as fast, as soon as it happened. I was expecting around like September it's going to go down, because I compared with the previous golden cross. I said, okay, I've seen Bitcoin going down. It had a major flash, but it happened like months later. And this time it happened all too soon, and we're like, oh, it got me a little bit by surprise as a time manner. It happened too quickly, and we're like, hold on a minute, what's going on here? But
I took this XRP short, and I literally had it set up like this. That was my trade over here.
9 to 10 to 11.
That was my trade.
Cool. 12 to 1.
I got 12%. That was my TP, and then look where it went.
I know, it's crazy.
Yeah.
I know, it's crazy.
I saw my, like when you jump onto Bybit and you, when you first jump on, then it shows current price action, like where your profit is, and then it updates and it updates if your trade is closed. I don't know if you get the same thing on Bybit, but I logged in and I was like 300. The price was down here. I was like, it was I think a 10x trade. I was in a 10x because of the stop loss.
Yeah.
And it was showing like 300 and something % up, and then I realized that the trade had already closed, and I only had that little move over there.
Oh my god!
But I was really not expecting the dump to be as major as it was either.
No, it was crazy. Once it lost the previous resistance, I had these that fair value gap on the left. I was like, okay, it's going to go down to fill it. So I was aware that it's going to go down. That's why I had my buy zone. If I switch now screens, let me switch back to screen. Here it is.
I'll stop sharing for you.
Okay, thanks. Let me do screens. Here it is. And go live. You should be able to see it now. Cool. So once it was losing that level here, guys. Right, let me pull that line there. So once it was losing these levels, because we had this fake out, that was like the stop one. That was a stop loss hunting. Yeah, that was like, they were trying to get people out of the market. But I had all these huge gap there sitting, and I was like, okay, is it going to go and trying to fill this gap? It's like fair value gap now. I'm on a 4 hour. If I go to the daily, you can see that it's a fair value gap there. And let me clear this. And I was like, okay, there's a huge fair value gap. It's going to go fill it. And I said, I was getting ready. I said, if you're going to lose that level there, that major support, if you're going to lose it, it's going to hand the fair value gap. And that was my first buy zone. If I pull that buy zone, unlock it, and put it to the left, you're going to see that it's sitting on the order block and the fair value gap, because this is your order block and this is number 1, 2, 3. So that is a fair value gap. All the way up here is a fair value gap. And I said, okay, it's going to come in and trying to fill it. And I was expecting some reaction, so to say, some reaction from the order block, because that was like a good order block. It has a huge momentum. So I said, okay, that order block is going to stop that price action, that down movement. And actually it happened on the other order block was sitting just below. And I got like on the 4 hour, I got 2 other order blocks sitting here. Let's go here on the left. I got like 2 order blocks sitting here. I got 1 order block there. I got another order block there. Both are sitting on my support trend line. And that support comes all the way from 15K. Right? That trend line comes all the way here, which is the 15K. That's December. Right? I said, okay, it's going to come down to these levels, that order block, and it bounce off. That's what the first order block got, let's say, mitigated. So that order block pay off its value. So it came down and you got these huge wicks. So you push the price up, but because the momentum was so high for the down, it's keep pushing the price down. And then somehow now we are horizontal. Now we are in a small range. And we're like, okay, this is a small range. This is a range. It's sitting under my buy zone. If Bitcoin wants to carry on, I will buy in the zone. If not, which more likely is going to fail, I believe it has another small push to the down, come to this order block. I need to see how it's going to react to this order block. But if it's going to lose it, then it's going to fill the other gap that we have here. We got a large gap here. So I assume it's going to come down to these levels. So right now, short term is still looking bearish to the downside, as you say as well, Chris. But in the long run, I want to make this clear. On the long run, guys, let's go back to the daily. On the long run, we are still bullish. We started on the 15K. It goes up here, comes down, retrace. This is a golden zone, and then it can still go up. Even if it goes all the way down to 20K area, 21, 22, right? Even if it comes all the way down there, we are still bullish, right? This is a golden, this is a golden zone. It's a retracement of the last up wave. I'll pull that Fibonacci again. From this last wave to the up, to the bottom, to the top, bottom to the top. This is a golden zone. We are still bullish. That's a corrective wave.
If you're looking at it, you're looking at it on a higher time frame as a long-term investment perspective.
Exactly. So a lot of people will start panicking because they lost that trend line and came all the way down. Oh, it's going down 26. We are bearish. Well, yeah, I mean it is bearish momentum, I think, for the time being. But in the long run, since we started at 15K, since New Year's December, we are still bullish. It's like a full retracement into that level, and still be bullish. We still have the trend line. That trend line, the second trend line that I have, comes all the way back from 2019, right? So that trend line's been respected multiple times. So I got a trend line, I got the golden zone, I got an order blocks, got 2 order blocks there sitting there. It's gonna save some down momentum. I believe this is the last. If you're gonna lose that. If you're going to lose that, let's say it comes like this and it's going to lose it, then from this point you're going to say, okay, it's bearish, we're going down, right? At that point I will be bearish on Bitcoin for the long run. Right? Until now, it's still bullish. It's like remember the other theory as well. What goes up very quickly, it goes down very quickly. Yeah, is Bert Simpson, boom, goes down, and it goes down where it started. And maybe you have another Bert Simpson there that maybe wants to come down to this level. So yeah, until then, you can short now. You can play the short game now.
It's a great zone to dollar cost average if you go for your longer time frame, high time frame portfolio.
Exactly. That's why I got the buy zone here for the long term. I said, okay, it came down to these levels, like it may come down again to 25-ish. So I said, okay, 25-ish is very good because we were sitting at 32. Yeah, we had peaks of 32. So we're down to 25. Now, if we want to come down to 20, even better. To go down to 15, I don't think so. It's going to be very, very unlikely to go all the way down to 15 where it all started. I don't see that happening. But, even here on 2021, it's good. It's good. I'm waiting for a very long time for Bitcoin to come down. I can do my DCA for Bitcoin because I got in when it was 50, right? So if it comes down again, we'll be fine. But good news, go to SANT, so to say, and go to the 4 hours. Guys, where was December? Let's go have a look. Where was December? Where was December and January? That was December and January. These levels here. Let me mark this. Now, this is SANT, altcoin, right? And we had, for altcoins, we had again Christmas, same levels as Christmas, back in 10th of June. And now we are even lower. So for the altcoins, we are even better than Bitcoin. Bitcoin was 15K, right, that area there. That was the lowest that we got from altcoins. Now Bitcoin is all the way up there, but altcoins are lower from Christmas. So on altcoins, it's Christmas again, even better because we are lower. So if Bitcoin wants to go further down, you can understand that the alts will come down even further down. So we're gonna be, oh my god, I can't grab the tool. Come on, my mouse is playing games. So if Bitcoin wants to go further down, that means altcoins will go even further down and will give me a better entry for alts. I'm telling you, it's killing it. This is SANT. Use other altcoin. Let's go to Mask. This is Mask. That was March. That was January 23. Right? Mask. That was Christmas. It's getting close to it. Christmas time. Here it is. It's getting close. Mask will come back again. Algo. Where was Christmas? Christmas was all the way up there. Where was Christmas? Algo is pretty mad. That was Christmas for Algo. Look how far we are down, and we'll even go further down. So when Bitcoin was like hitting the bottom, hitting rock bottom on 15K, Alt will give you another opportunity. Algo is going further down. SANT is going down. Atom. Let's have a look on Atom. Christmas. That was like Christmas. That was Christmas. Look where Atom is. It's lower than Christmas. So alts will give you lots of waves. What about waves? Waves. Where's Christmas? Christmas around that time. We are getting close, like Algo. Here it is. That's Christmas time. It's getting close. So you've got multiple alts that they're going down. If I pull other alts, you get the idea. Where's Christmas? Christmas around that time. Aptos still has time to go down. It has more room to come down, right? AVAX. What about AVAX? That was Christmas. We are on Christmas time. Here it is. We are still on Christmas time. So, you've got a lot of opportunities on altcoins that are going lower when Bitcoin still has room. Alts are sitting on the same level where Bitcoin was sitting at about 15k. So lots of opportunities out there. So don't be feel sad that you missed a train. You haven't missed a train. Alts will give you another opportunity again. See the bright side. See the positive things. About ICT, I see someone talking about I see someone talking about ICT. Guys, ICT, the inner circle trader, is the father of ICT or smart money concept. But please be careful. That strategy applies on Forex, right? On crypto, it's a little bit different, only for the fact that we have high volatility market. So they play, ICT applies on Forex, that they have smaller moves and they play with like very tiny percentages. And the price action is not so volatile, so they know where to mark the levels and stuff like that. In crypto, you need to have a little bit higher tolerance. So be careful if you want to apply ICT in crypto. You need to have high tolerance. Don't go very strict. Like the silver bullet of ICT, it will not work on crypto most of the times, and then you get discouraged and say, okay, I wasted my time applying ICT in crypto. So that's a note for you, just for you guys, just for you to be aware that when you're applying ICT methods, be careful, because you're on a volatile market. ICT trades Forex, right? So different market, different numbers, different percentages, different mentality. So be careful about that. That's the only thing that I want to say. You are more than welcome to use whatever you like. Let's have a look about the messages and see if I miss anything, and then I can give slowly my way to Chris, because we are heading on his show. So I'm gonna step down and Chris will carry on. We're gonna share the same,
no worries,
same stage. No, brother.
I've been sitting listening to you in the background as well. I love it.
Good stuff.
I love listening to you go on.
Thank you very much. I hope I'm doing well. I hope that I help people here. 4 a.m. 4:40 a.m. over there. Jeez, good morning to there. Good morning over there as well. Let me see. Did I miss any questions? Any problems, guys? Igor, hello Igor. I see you there. Why are you purple? It's number 8? Jeez, you got the wrong roles, Igor. What did you do? Did you disappear from school and you re-entered? He's from cohort 2. Cohort 2 or cohort 3? Don't remember. I'm from cohort 8. He's doing the lessons from the beginning. What are you doing, Igor? Yeah, cohort 2. Yeah. Igor is my teammate. Yeah, cohort 2. Good stuff. Order blocks.
All right, cool.
Guys, order blocks, I'm gonna do another day. I'm gonna do another recording for order blocks. Right now we're gonna stick to school syllabus, and that is like trend line, support, resistance, and stuff like that. I'm not discouraging you about order blocks, but our syllabus here is certain strategy, and I want to make sure that you understand it completely. Send the strategy, because it is the basics. You need to learn the basics very well before you progress. School will hold other courses as well in the future, so don't go away, because we're going to have more courses coming in, more stuff for you to learn. Good stuff. Chris, you want to take over? That'll be great.
If you can give me 2 minutes, Freedom. I've got someone who's just arriving at my place to
Okay,
do some
take your
work.
time.
I just gotta let them in, and then I'll just give me 2 minutes.
All right, no worries, brother. No worries, brother. Okay, guys. I can get some last questions if you wish, and then I'll give room for Chris. You're more than welcome, guys. You're more than welcome. Don't be shy. Don't be shy. Go for it. Throw your questions. I see a chart there, Wayne. Very nice. You're on short, on BLZ. Looking good. A little bit consolidation there. It's giving you a little bit hard time. That's alright. Still on that trend line. You respect that trend line. As long as you're respecting that trend line, you're good. You're good. And guys, have a little bit some fun on the lower time frame. When the market is like that slow, as we have now here, you see, I'm in a 4 hour and you see a range. Yeah, I mean, nothing much doing. I mean, look at that, it's a range. Yeah, nothing going on. A bit boring. While you wait, when the big move is going to happen, what you can do, you can shift down to, instead of 4 hours and 15, you can shift to 15 and 3. Go to 3 minutes, and when you zoom in, you'll see on that range some waves, right? And you have an up wave, let's say from that range, and then it's doing like a small wave to the down, up, down, up, down, up, down, up, down, up, and then maybe up, down, up here. You've got multiple waves, right? Try and make some TA on your own, and you're trying to do a short position from there to there, and then shift around, make a long position up to there, and then ride the waves, right? You can do that on a smaller time frame, and make sure that you check out on the 15 or even 1 minute. Yeah, I mean, you don't get scared about the 1 minute, right? And make sure that you are on the right direction, right? So if you are on the bottom and you're going up, make sure that you do long positions, right? And when it's on the top and it's going down, make sure that you're doing short positions. And that's it. Try to make some money, have some fun, exercise on your TA, trend lines. Just pull the trend lines. Let's say that you got in from here and it goes up, fine, pull the trend line up there, right? And when you get the break and the retest of the trend line, then it's time for you to exit. Just use the trend lines. Another trend line there, and that's it. I mean, just follow the trend line. It broke the trend line, came up, retested. For you, it's time for exit. You're gonna probably exiting around that level there. There's no way for you to know where is the top. So once it's gonna pull away, then you're gonna say, okay, that's my exit. So maybe your entry will be around that level. Always make sure that you enter on the support of the trend line. Yes, on the trend line. On the trend line. Not in the middle of nowhere. Don't try to enter here. Right? On the trend line. On the trend line. On the trend line. And try to ride. Try to maximize, have a little play. Right? Risk management, always in play. 1 or 2% of your full capital to be risk, not more than that. Don't go high leverage. Do the math, do the calculator. You will get 5x, 10x, 6x. That'll be fun. And have some fun. Yeah, the same applies on the down move. Pull the trend line, and then find your way for you to exit. Yeah, I mean, right now he gave you, let's say, he gave you a reversal. That was the low. This is a new high from these highs. Second high low. It's giving a high. Let it come down as much as possible, and then try to exit from your entry there, or for your entry there, whatever it is, trying to exit, and then use that. How much was it? He gave you like what? He gave you, even on the top, 0.5%, 0.5%. That times 10 is 5%. Get some money. Other people waiting, you can make 5% of your wallet. Have some fun. On the 1 minute, how much did it take? I mean, how long did it take? From here to there, let's say, it took you 11 hours. All the way up there. It took you 11 hours. When other people, half a day have done nothing, you did something. And that is on 10x leverage. Do the calculations, see how much leverage you can use. Right? Have some fun. Even that one, even that trade here, from there, let's say there to there, it goes up, it broke it, came down, retested, it gave you 0.4%. That is 4% on 10x. How long did it take to play? It took from there, after the break, after the retest, let's say the retest, it took you 3 hours and 18 minutes. What is your, 3%, 4% on your wallet? That could be like $50, $100. Depends the size of your wallet. That's down to you. You can have some fun. And this is, it's not scalping. You're not scalping, because scalping, what they do is scalping, guys. A lot of people talk about scalping. They try to trade from here. Let me grab the tool again. My mouse is playing games. So they're trying to scalp from here to there. That's not what I'm telling you. I don't want you to do a scalp. I want you to say, listen, I'm going to trade the waves. Complete waves. Yeah, not the internal structure. Complete wave. Bottom to top and then down to the bottom. And let's make that a yellow so you can see it. This is the kind of wave that I want you to do. It's not scalping. Right? I want you to do the full wave from all the way to the bottom, all the way to the up. That will give you some percentage. Not a lot, it's a small trade, but it's something for you to practice and have some fun. 0.5% times 10 is 4%, 5%. Have some fun. Yeah, don't scalp. Don't try to do the inner waves. Don't try to scalp from here to there. Right? Try to ride the full wave, all the way to the top. And then reverse and try to follow the TA and say, I get a lower low, I get a lower low, I'm good, I get a low low, I get a low low, I get a low low, oh, I get a new high. This is the uh-oh moment. Yeah? Trying to ride the wave all the way from here all the way to down there. How much that is? From here to there in average, again, 5%. So you get 5% on the up and you get 5% to the down. So here's your 10% for the day. 2 trades, 10% of your wallet. Here you are. When the market is dead boring, when it's dead slow and it's going sideways, you always find waves. Remember, markets don't go flat line. They don't fly in a straight line, and they don't go sideways on a straight line. If you zoom in, you'll see little waves. Right? The same thing happens on the uptrend. The only difference is if we are in a good bull run, on a 1 minute, the waves will be like something like this. Yeah? You will never catch a 1 minute when the market's moving. You need a higher time frame. But when it's dead slow, 1 minute is fine. It's slow. 1 minute is slow. Otherwise, you go to 5 minutes.
Do you trade the 1 minutes and 5 minutes freedom often?
I do. Not very often, but when the market is very dead slow, it's doing like sideways, doing like indecision, like we have now in Bitcoin. Instead of using 4 hour and 15, I go to 15 and 3. My high time frame is 15, and then 3 is my smaller time frame. And I said, I need to make some money today. I'm not going to make thousands, but let's make some money today. I don't want to lose opportunity of this day. Today, the market is boring. Fine. Go down to 3 minutes. Do I see a wave? Yes, I do. I see a wave to the up. I see a wave to the down. And maybe I see a wave to the up. So let's make the most of it of these waves. If I go to the left, what do you get? You get waves. So waves will ride. Down, up, down. That's it. And don't be greedy. If it gives you 1%, just take it. 1% is 1%, 0.5% is 0.5%. It's not bad. On 10x, it's 10%, and 5%. It's alright, it's fine. Have fun. Make some money. Don't just wait around, do nothing until the perfect a trade will come in 4 hours. It will take you days. This is a 4 hour, and we're sitting here in the range. You're going to be waiting for two things: break, retest, and go, or break, retest, and go. That can take 2 days. What are you going to do for these 2 days? Yes, this is a big fish. You can grab the small fish.
Personally, I spend personally I go and spend time with family.
Exactly.
I struggle with the lower time frames because it's like an adrenaline rush for me if I go too low time frame. Then I'm bungee jumping.
Okay. Yeah, forget about it. I mean, if you feel that you are risking, that you are increasing your risk, as a trader, and you feel that is too risky, step out of it and say, listen, I'm waiting for the big fish. I don't care. It's going to take 2 days for this to play out. I don't care. I go to my family. But let's say that every day that I spend like 3-4 hours every day on the charts. So I'll try to find opportunities. So if my 4 hour time frame doesn't give it to me because it's like that slow, then I go to a smaller time frame. And I have to be very disciplined with myself. Thales, now you're on a smaller time frame. The percentages are very small. You're gonna be happy with 0.5%, and don't moan about it. Don't be greedy. Go with 10x. You're gonna be fine. 2% risk of the capital is still in play. It's very boring. That means very slow. That means the 3 minute is gonna be like a normal volatility waves. So you're gonna be most likely you're gonna be okay. If it's too risky, just walk away. Don't gamble. Don't try to predict the market, or don't go like it's very slow. I see an opportunity. I go like 50x. No, don't do that. This is really gambling. Use the same strategy: trend lines, support resistance. Use a risk management tool, 2%, 1%, whatever you're using. Use a calculator to see how much your leverage can be. 2x, 3x, 5x, 10x, it's fine. Don't go crazy. And then make like some money. You're not going to make hundreds of them and thousands of them, but you can make $20, $30, $50. That is money for you to put in spot.
I trade. So I look daily, 4 hour, 1 hour.
Yeah.
And,
1 hour. That's good.
And so I look daily for sort of my sentiment for the day. Am I bullish or bearish? And then 4 hour, 1 hour candle closes for entries, entries and exits. And then so I'll look for because today I would be my sentiment is bearish. I'm looking for moves down, and I'd prefer to look for something that's going to give me a good entry on a daily support, daily resistance zone, and then I take that one trade, and I'll get it to stop loss to entry as soon as possible in the trade. So I'm looking for sort of a tight stop loss, and then I'll let it ride, and I can forget about the charts for a few hours. Especially because I've got fiancés, and I've got one, not multiple, who I want to spend time with, and and then so when I go to the,
is she there? Oh, you're lucky.
No, she's currently she's in South Africa with me at the moment.
She's not at home. She didn't hear that. So
no. That's why I booked this slot. She does her like she's got her like other stuff that she does on a Monday morning, so I can do this with you guys.
Good stuff.
We timed it. What I'm gonna do now for the guys in the audience who are still here, so essentially I think I think we can just keep this stage running instead of closing and opening again with the round table.
It's up to you. It's up to you. Or whatever you feel comfortable with. It's up to you, brother.
Well, look, I can't start the roundtable stage because we're on the same stage, but I don't think it matters. I mean, you guys are here in the audience.
Hold on a minute.
We can just keep running it.
Hold on a minute. If I go to the events now, and if I press the start of the round, okay, stage is already open. Okay, it will not allow me to do that. It will not allow me to switch.
Yeah.
Okay, what's the title? Coffee chart. Okay, that still remain. So we need to. Okay, we are forced to shut it down. No, it's okay.
I think we can just keep it running.
It's up to you.
We can just keep it running. If you, I'm gonna. The title will remain Coffee Charts with Tellers, but essentially we're gonna move into a roundtable discussion now around the markets, what the current sentiment is for the week.
No, I found a way. I found a way, brother.
Oh, you got it?
I got it. I found a way.
The Discord master.
Okay. Okay, here it is. Save changes. Done. Roundtable with TA and Chris. Here you go. We changed the topic.
Okay, winning.
Good stuff.
All right, guys. Well, thank you very much. Tellers, I was really enjoying listening to how you are viewing the current markets and the way that you trade. I think the biggest beauty of this community is that as traders, we are very, it can become very lonely sitting in front of the charts on your own. And until very recently, until this community actually started, that was it. You had your YouTube channels where you could go and listen to the traders that you respect, and then you're on your own.
That's true.
I love being able to come in here and chill with you guys, and give different perspectives. And we all look at the charts differently, but the primary underlying result comes, which is our sentiment towards the market. Are we going up? Are we going down? You can look at the charts, you can do a technical analysis in 100 different ways and come to similar sentiments, or you can come to completely different sentiments, and that's why there is always a buyer and there's always a seller. If you're I can look at it and go bullish, and somebody else can look at it and go bearish, and therefore I'm buying and they're selling to me. The component that really falls into that, and it was a quote I read in a trading book where he was saying that essentially, like, there's no proof, there's no perfect sort of trading strategy where you're always going to be right or you're always going to be wrong. It comes down to primarily your risk management, and are you able to cut your losses quickly and grow your winners quickly. So that you can maximize on your wins and mitigate your losses, so that overall you've got that you've got a positive gain on your portfolio. And a lot of traders that I chat to, you end up adding to your losses and cutting your wins too quickly. And you do it the opposite way around. You get into a losing position, and now the price goes down, and then you feel that, I'm buying this now, I'm buying it at a discount, so now I can add more to the position. And then it goes down further, and you're like, okay, that's even bigger discount. My first entry was at $1, and now it's at 50 cents. So now if I buy at 50 cents, then my DCA is at 75 cents. But you're essentially doubling the capital and also doubling your risk in that position as well. You got to have clear entries and clear exits, and clear zones within which your trade is no longer valid. And you cut the loss, and you take that, you remove emotion from that decision-making process, and you cut it, And then on your wins, that's where you're getting your market, your MSS, your market, shift in structure. You've got confirmation of your trend. And until that trend is broken, you can add to those positions while essentially then keeping your risk at a minimum. and grow those gains until you get another shift in market structure, and essentially, you then taking your gains off of the table. So that's kind of like where we're going to go with the session today. I'm going to take you guys through sort of what I look at on a daily basis while I build my business, because trading for me is a business. It's a company within which I look to make a certain amount of capital every single month to cover expenses and grow my investments. So and each day when we look at the trades, each day when you look at the charts, you can get a different sentiment, and it all comes from the previous candle closes, where I look at in hierarchy of importance, candle closes on the weekly, and then the daily, and then the 4 hourly, and then the 1 hourly, and then the 15 minutes, so that you can, the higher the time frame, the more important the close. And you can even get that's why you can get those breaks on a daily time frame below your moving average, but then on a weekly time frame you get the close, and it becomes okay, cool, this is the real shit's gonna go down. You know what I mean? Like, you can sit there and be like, okay, wait, the weekly close is below trend, is more important than a daily close, and the daily close is more important than the 4 hourly. So it comes into like, what time frame am I trading? And you can be bearish on a weekly sentiment, but still bullish on a daily and an hourly sentiment. So these are how these things then can play into our trading strategies, depending on like your time frames. Like that's why for me, tell us, getting down to like a 5 minute, 3 minute, 1 minute trades, it's like I can't take my eye off the screen for like a moment. Like I can't go back. For me, like I can't even make a cup of coffee and come back, because I'll find that trade's gone against me.
Yeah, no, it's like Wayne B. That's what happened to him. He went to the toilet, and since he came back, it was like stopped out. Yeah, when you do 1 minute or 3 minute charts, you need to, that chart wouldn't play very quickly, like a couple minutes, and maybe to an hour. After that, the wave will change. So this is like, very, very quick trades, but you need to be there. You cannot leave the screen. That's why I try to say to you, try to target the complete wave. Do not try to scalp the inner structure. So go for the full wave. Pull the trend line and see how it goes.
Look for a retest. Yeah, look for your support and resistances on a higher time frame, and then take your trade on a lower time frame.
Exactly.
So that you're still playing the major supports and resistances for the day, and not and not just seeing that you're making a higher high on a 5 minute chart. Like, okay, I've got a higher high, therefore I'm gonna jump in on the 5 minute chart on a higher low, not knowing that higher high was a major resistance on the hourly, and therefore actually you're coming back down to you're gonna go all the way back for a double bottom.
Exactly.
You gotta, so like the size of the wave is determined, or like can be affected more on a higher time frame resistance zone. Unless you're getting like a massive volume into that resistance zone, the probability of you breaking it, on the first bat is gonna be low. I mean, you can look at like what INJ's been doing. You can look at what Rune's been doing, and like these things have just been smashing resistances and not even retesting. But you got to have the volume for that. You can't until you start seeing the volume coming into the project. I would look. Then you can look at sort of like the second wave and the third wave of that volume, with the volume moving into that token. But you're not going to just see that kind of, the probability of you picking that project on the first punch, knowing that this project is going to punch through this major resistance when it's first high volume move in price action. your probability is 1 in 10,000 of actually like picking that token. You got so many different projects to look at, and so you got to make sure that resistance on the higher time frame, you understand where those are if you're going to go look at trading 5 minutes and 3 minutes and 15 minutes. And like you said, I agree 100%. Like, on any time frame, you're looking at major support and resistance zones on the time frames above it for your and then you're sniping your entry on those lower time frames. So my lower time frame is a 1 hour, and therefore I'm looking at the daily support and resistance zones as like primary points of action to get entries that are low risk. But like, I guess if you're gonna go trade you want to do like daily 5 minute, 15 minute, 3 minute charts, then you're going to be looking at the hourly, 4 hourly resistance zones that are close, that are in more like closer proximity to where current price action is, and to scalp those things.
You have to be aware. You have to be aware where the market is, and you cannot ignore. Now and then you need to go to 1 hour or 4 hours and say, okay, whereabouts are we? Now, if it's a dead slow like today consolidation, then 4 hour will not give you anything like very tiny bars. But even as I say, my high time frame is 15 minutes. 15 minutes is enough for you to see the structure of the daily. But you don't focus only on a very small time frame, like 1 minute or 3 minutes, and you forget about it. You need to make sure that you go back to a higher time frame and say, okay, whereabouts am I on that range? Am I on the top of the range, or am I at the bottom of the range? I'm in the middle of the range. It's like the support and resistance. So you can design where to enter and how long you're gonna stay. But generally, my time frames are 4 hours as a high time frame, and 15 are my TA and entries and exits and stuff like that. When it's boring and I need to make some money, like today is boring, it's nothing going on, then I can play around with the 15 as a high time frame and 3 minutes as a small time frame, just to make some money for the fun of it. That's all. And practice your TA, keep on sharpening your skills. Trend lines, support resistance, high highs and high lows, all the other way around, lower low and a lower high. Get these into your system that you can see them without drawing them. Reach to the point that you can see them without drawing them on the chart. I see order blocks all over the place because I've been I've sharpened my skill about order blocks. I can see them without me drawing them. I don't need them to draw them. I can see them. And then I focus to see where are my extreme order blocks, where are my swing order blocks. I don't care about the order blocks happening on the way up, but I do care about the swing order blocks, or the extreme order blocks, how we call it. So I see them, I'll mark them, and then I decide how I'm going to trade. Simple as that. Right.
And you got your
Go.
No, it's just saying. You got to. I think something that people should realize when trading a lower time frame is the time frame of their trade is not something that you can sleep on. No,
you don't.
Because as soon as if you're going to take a 5-15 minute trade, that's a 1 hour to 4 hour trade, maximum. As soon as you start letting it run longer than that, you're looking at different support and resistance zones.
The 3 minute, think in that way. I mean, if you look at the 3 minutes, 20 candles, is 1 hour.
So an hour, so that's a lot of price action.
Exactly. So you're not going to stay there for overnight and say, "Oh, I'm going to do the 3 minutes and then I'm going to leave it for tomorrow." No, that's not. That is more likely a 4 hour.
In and out,
The 3 minutes chart is in and out, like for half an hour, 1 hour, get some money, get some profits. Then just for me to take some opportunities for this dead slow, boring day, and that's all. But smaller time frames, small percentages, and very small time amount of you being in the market. As I said to you, make sure that you take advantage of being in and out of the market before you've been detected. Don't fall into the trap. So that's about me from you guys. I'm gonna let you run with Chris. Chris, thank you for having been shared with the stage with me. Guys, I'll see you. I appreciate it much. It's been a very long time that we haven't spoken on the same stage, so it was lovely. It was very lovely.
Yeah,
we can do that again next Monday, I'm sure.
For sure.
Good.
Definitely, man. Yeah, it was loads of fun.
Right.
Thank you very much for sharing the screen with me.
Okay. Thank you.
Okay, awesome. So we're gonna jump into some charts. Yeah, guys, we're going to